know if your portfolio can withstand major market volatility, and how do you avoid taking a serious hit?
Well, here to share insight on his firm is focusing on preparing people for retirement is president of Golden Years Financial, Mark Cordner. Good morning.
It's good to be with you. Thank you.
Well, it's great to have you in. So we're talking the relationship between the market and retirement. So how do you know if someone is taking too much risk when it comes to that?
Well, most people are, and this is a real anxiety for a lot of people now because everything's been so volatile lately. But the truth is that a properly designed portfolio can really protect us from risk. And more than anything, it has to do with timing. I mean, when we need to get at our money and when the market's going to be up or down, and obviously we can't control when the market's going to be up or down. And so we just need to structure the portfolio properly to protect us against those things.
If a viewer's watching right now and they think they fit into that category, is it in their best interest to act quickly?
Oh, I would say absolutely, yeah. I mean, the sooner we safeguard our money, the better off we're going to be in the future. I mean, again, most people have more risk in their portfolio than they realize, and the truth is that we need to have some money that's out of the market, some in to be able to grow and outpace inflation, some out so that it's totally protected. The last thing we want to be doing is reaching into a declining portfolio when it's down, because that's going to accelerate the depletion of the account, which is like a death spiral of sorts. And so we just need to have some money out so we can reach into that when the market's down, and when the market recovers, then we can pull from there. But most people just haven't considered their portfolio that way, because we've been trained to think in terms of the greatest possible returns we can get, and not about preservation. Really, preservation is what people are thinking about as they get closer to retirement, because they have less time to recover.
Yeah, for those who maybe might be hesitant to really make a move, what can a big loss before retirement really mean for someone?
Oh my heavens, that can be devastating. I mean, that really can be the cause of having to postpone retirement for a matter of years, sometimes indefinitely. And that could just be devastating for people. So again, it's that two-pocket approach that I advocate, this idea of having some money out of the market, some money in the market, because again, we can't control when the market's going to do what it does. And 42% of people actually end up retiring earlier than they expected for reasons beyond their control. So we really have to think in terms of preserving at least a portion of our money.
Yeah. There are a number of people out there who may not be using professionals like yourself. They've seen the day trader, the influencers on Instagram who are making millions from just like, you know, sitting in their car. What's the dangers of that, of trying to do these kind of things yourself without any expertise or knowledge?
So kind of the do-it-yourselfer?
Yeah.
And there's a lot of them out there. There always will be. And the truth is, they are just like the rest of us. None of us know what we don't know, right? We just don't know what we don't know. And most of them have been conditioned to think in terms of chasing the biggest returns. And they do that trying to time when to get in and when to get out of the market, you know, which sector is going to be hot, which sector's not, for example. And they're making all these decisions based upon historical data that has nothing to do with the future. And so what we really need is a mental shift. We've got to get people thinking about risk management, because retirement is far more about risk management than anything else.
Yeah, and there's so much going on right now. What are some things that people might need to be aware of who might be nearing retirement right now?
I'd say back to that preservation of assets. You know, we got to shift again away from this thought of just chasing sexy returns and think more about preserving, because it all boils down to time. What do we not have as we age? Time. You know, we didn't think this way when we were 20, but as we approach retirement, we don't have time to recover. You know, it's been said that if you're earning 6% rate of return, you've had a 30% loss, it's going to take you 6 years to recover from that. Yeah. And that's a kind of a harsh statistic when we don't have time to really recover.
I guess from what I'm taking from this is you keep on mentioning risk management, and it's a balance, right, of looking for returns but also having a safeness within that portfolio that's slowly garnering a little bit more interest or slowly building up, and that's where the expertise comes in from people like yourself.
Well, absolutely, yeah, because we haven't been conditioned to think that way. Wall Street's conditioned us to think just in terms of sexy returns and chasing that and incurring a lot of cost to their benefit in the meantime. But we've just got to think differently, because there are things we can't control in life, you know, longevity being one of them. And so we've got to deal with issues like taxes, inflation, longevity, health care. All of these are big issues, and most people are just chasing sexy returns.
Yeah, well, Mark, thank you so much for sharing your insight with us.
Thank you. Good to be with you.
The first 5 callers with a portfolio of $250,000 or more will receive a complimentary retirement plan just for them, with the opportunity to sit down with Mark and his team to prepare you with a plan for retirement.
The number to call is 702-766-3877. Again, that's 702-766-3877. And for all other info on Golden Years Financial, just visit gyfinancial.com.